who looks at Siemens very closely, is joining us now. Amit, afternoon. Thank you so much for your time. Talk to us about whether it's the justified nervousness of the street. How are you rating at this development?
Right. Thanks for having me. So I think there are talks that Siemens Energy, uh, because of the obvious issues, could sell back the 24% part of 24% stake which they have to Siemens AG Limited. So basically, just to the way to shore off their balance sheet. So I think with respect to Siemens Limited, which is the Indian entity where there are talks that they'll be changing hands. I think specific to Indian entity, there should not be any major impact with respect to business performance. We are quite confident, and recently we did attended Siemens Innovation Day and the commentary from the last quarters. We quite comfortably expect a strong quarter this quarter as well, and long term we are expecting at least 12-13% CAGR on top line. And we saw margin improvement last quarter. They did more than 11.5-12% margin. They're getting a lot of operating leverage, and on the Indian entity front, the commentary on order intakes remains robust. We saw they got 5,300 odd order intake last quarter, and full year expectations are that they'll be crossing 20,500 in all. And apart from this, I think the high growth areas, obviously, there's a lot of traction there, whether it is waste to heat energy, data centers, and few other areas which company continues to talk about. And the large orders expected, like the one which they got for the locomotive in upcoming quarters as well. So I think for Indian entity, business performance-wise, the story remains intact. Having said that, the change hand at the global level, in fact, should consolidate if it is happening. The shareholding with Siemens AG, which is already holding 51%, and I think should not have a major business impact on the Indian entity, as far as I understand.
Sure, Amit, point taken. But just quickly wanted to get a few clarifications from you as to what your view is, because the street believes that A, the transaction could happen perhaps at a discount of what the current market price is, and that's why the stock is coming under pressure. And the second thing is that perhaps some gross margins might be impacted on account of the change in the outsourcing mix due to the change in the shareholding as well. Your take on these two?
Right. So first, coming to change in the outsourcing mix. So as you said, obviously this shareholding change, we have to assess what is going to, the strategy again for Siemens AG. But as far as I remember and gather the commentaries, and we are seeing the gross margin improving on the multiple front. Not only, as you said, obviously one component is outsourcing, but because of the various segment which are contributing, the high margin segments are now contributing more, and we have seen that productivity enhancements also happening. So I think cross margin per se, we have also not taken a major improvement, but we are seeing operating leverage, and because of the short cycle and much higher order intake, they're able to deliver good revenue. So I think that should remain intact. And I think second question you did ask about.
Yeah, the second question was with respect to the pricing of the transaction.
Right. So I think I would not like to comment. Obviously, in the past we have seen that shareholders rejecting the the large motor business. They wanted to carve out, and market did believe that the valuations are low. So obviously, if anything of that sort comes in, that definitely should impact. And we have seen very recently that happening with the stock,
Okay,
with the
thanks, Amit.
company.
Okay, thanks, Amit. We take your point. So it's not going to fundamentally change the business, but for now, the stock seems to be reacting a bit, a knee-jerk reaction, perhaps. Thanks for making time. But shifting focus.